time for the Personal Finance Corner. Dhirendra Kumar, CEO at Value Research, joins us on the show as always. Dhirendra, hi, afternoon. Infrastructure funds have been extremely disappointing in the past few years. But given that there is now hope that a new government may free up the stalled infra projects, do you see hope for the sector?
Yes, infrastructure funds have been extremely disappointing, and extremely disappointing for the last 5-6 years. But the disappointment was not on account of stalled projects, because the investment universe of the infrastructure fund is something which is I don't think all the infrastructure companies were out of shape. It was just that it was a very mistimed big launches of these infrastructure funds, and investors were able to catch the peak of the infrastructure cycle. So if you look at it, most of the money in infrastructure funds came in 2007 and 8. And this is where, investors saw the previous performance, performance in the last 2-3 years before that. And they were able to, most investors picked the peak of the market, peak of this cycle, infrastructure cycle. And after that, they were bound to lose. And we see the natural cyclicality. So it has not much to do with the likely change in government and something going to really radically change. It is just that infrastructure funds or the infrastructure companies, some of them are facing some kind of they were very cheap, and that is the reason why we see that over the last 3 months infrastructure funds are the best performing category. It is up about 17-18% over the last 3 months. That's one. The other is that a lot of these companies, investors are a little hopeful that they might see a turnaround, not because of a change in government, but because they have gone through the economic cyclicality. Many of these companies were heavily into debt. They have started cleaning up their balance sheet. They have started disposing of their assets. So some of these big companies, they are undergoing some change. There is also little hope that and government factor, or the likely change in government is going to be one of the factors, but I don't think it is as dominant factor. It was basically these companies were cheap, and some of these companies are investors are becoming hopeful that they are undergoing some change for the betterment.
Investors are holding these funds. Do you recommend they wait for an opportunity to sell into some of the units in coming few months and weeks?
No, I would urge that investors should use this opportunity as at the same time at best you can try and time it a little bit. But most investors should despite these funds going up by 17-18% over the last 3-4 months, I don't think investors should be focused on infrastructure funds. You are better off with a diversified equity fund, simply because nothing prevents a diversified equity fund to be tilted to infrastructure fund, but nothing can actually make a infrastructure fund diversified. So you are better off. Most ordinary investors will do well to diversify than get focused on to a thematic or a sector fund.
Dhirendra, if there are investors looking at taking a strategic position in infrastructure, do you recommend using any of these funds?
Yes, if I would not say that it should be any sectoral fund or any thematic fund should be a strategic part. Yes, you can be tactical about it. It could be one of the things where you want to bet on, and clearly define what your exposure should be. And from that standpoint, infrastructure certainly looks promising. The best may be ahead of it, and it will be with great turbulence. So if you are reconciled to it, by all means it is worth betting on. But as I said earlier, that most ordinary investors can do without it. If you are looking at a tactical bet on infrastructure, it is worth betting on, because a lot of things are in favor. There might be a tailwind to support an infrastructure boom, in a sense that the interest rates can't remain this high for too long. So which means that we are in the middle, or we are close to a rate cycle where it can only go down, which can substantially benefit these companies. Many of the companies who were heavily into debt for last 4-5 years, they have started paying their debt by selling off their assets, and that could be a very significant that can lead to turnaround. Then I really wonder that the capex cycle can be far behind if interest rates go down. So that can also be a significant booster for, boost for these companies. That apart, a change in government and the way the likely change and the way it is been talked about, that focused on execution, that can have a significant bearing. Besides that, sentiment change. 3 months back, everybody, 3 or 6 months back, everybody was extremely pessimistic. Today, I see optimism in the air, and that itself can boost this sector as well. So, generally speaking, there could be, so you should have, one can have a tactical bet on infrastructure funds, and there are worthwhile, there are many funds to choose from.
So, are there any equity diversified funds with large exposure to the infra sector?
You don't need to worry about it, because if you look at any diversified equity fund, it will be about 50-60% allocation to the infrastructure sector anyway. So in that sense, you can, if you are in a diversified equity fund, because if you look at any infrastructure fund, the way I look at it, any diversified equity fund, and you drop pharma and IT out of it, and it becomes an infrastructure fund. So in that sense, you are not deprived of anything. And nothing prevents the diversified equity fund to tilt more towards the infrastructure stocks.